dollar. I think that'd be interesting for a lot of people, and then we'll call it there. So the AUD dollar, as you can see, it's come down for a significant period of time. What is more relevant with the AUD dollar in this case is the point where you're at now. This stumbling around, okay, it's like a drunken fool falling down the stairs, isn't it? This stumbling around, previously you had a move to key resistance with this level, okay? And that's why you had all these candle wicks. You come back to the same point, you've seen rejection there before. Rejection is exactly what you get again. That has pulled the market down and down and down. That weakness in the AUD and that strength in the dollar is pulling it down. It's the same story for the pound dollar, the euro dollar, etc. They're all just getting pulled and pulled down by this dollar strength. Now, given that you've got ADP employment later for the US, you've got the Fed interest rate decision, ISM manufacturing new orders, that is the US economic zone. So you may find that it does affect the US dollar, which can change what's going on with these pairs. But if you just look locally on your weekly, you can see this upside rejection is consistent. And you're really not seeing any buying power. Now, I did mention that, and I actually said specifically, I think you're going to stumble lower down. It's not going to be fast, it's going to be a stumbling motion. And if you're shorting every high, like I've been calling, you'll notice if you follow me, I've been calling every single short on here, practically every time, because I know that negative market sentiment is persisting and there's weakness in the market. But I'm doing this very, very carefully because if you're shorting a low market, you don't have as much market value inherently. So at this current point, what you do have is a continuation of that weak market sentiment. Same for all other dollar pairs, but you can see that in the chart. Okay, you don't really need to know what's going on in the news or anything like that. You can just see by looking that this is weak and weak and weak and weak. Now, although it's weak, the price is still considerably low. Okay, you've come off from this point here at about 0.69. You've come all the way down to 0.627. That is a very long, long way. Your last fall took you from this point, 0.68, to this point, 0.64. Okay, so considerably less. I mean, if you look at it in percent, that's 9% of a move. And you look at that in percent, and it's 5% of a move. You look at this one, and it's 4% of a move. The last time you fell significantly, although it did take a period of time like it is now, was 8% of a move. Okay, so this fall is bigger than that recent large fall. If you go to August, that is the last time you have a significant fall that is bigger than this one. Okay, so this overall downwards trend is just continuing over time. Every time you get to a new low, you've got a really weak market that drags down, similar to what you see. Now, there's no point in buying these lows and thinking, oh my word, the price is so low, it's just going to fly up and I'm going to be rich. Because if you'd done that, it would have gone incredibly wrong. So if you are going to be looking at a long-term low price, I always suggest to just put your time frames up. It gives you so much more of a clear picture of what is going on in the long term. Okay, so you can see you have rallied since 2020 somewhat, okay, to the upside, and then in 2021 you fell considerably. Now the last push from this candle wick to this point has just been slapped back down. You came to your key moving averages. Perhaps those people who believe in it saw a cross of the moving averages and that made the price fall. It's not the case. It doesn't happen every time. But yeah, that is what happened that time. So you're pushing into these candle wicks. That level is looking weak, although it is causing a little bit of a jitter. The reason why you're getting these jitters in price, okay, these little pushes up as you fall, like this, is because you're pushing into a historic support level over here. It has to be broken down. So that's why you're getting it. But you'll notice the pushes are not succeeding because people are still shorting the AUD and buying the dollar, and that's pulling it down and down and down and down. It's like a tug of war. Okay? The side that is trying to pull the asset up is weak. They're full of wimpy people with really thin arms, a bit like I used to be. And the strong guys are on it, or women, and are pulling it and pulling it and pulling it, and it's pulling it down. Okay, that's what's happening now. So I, in these situations, say, okay, well, I haven't got that strong market sentiment or anything. I'm just going to say, you know what? I'm going to space my entries out and I'm going to make them mega light. I might get in long all the way at 0.58. I might let it drop all the way. Okay, because you don't know how far it's going to go. Once it's fell and it looks extremely weak and you've got no significant price action levels to go off, then it's better just to drop your size and simply wait. Okay, in my opinion, or at least that's what I do. Because, like I said, if you're buying these areas and it's coming down and down and down, you're going to have to do far more work hedging. Okay, if you're using my method, you could have hedged all of this. You could have been hedging since August. You would have made enough money to close out everything you'd got wrong. Okay, so just bear that in mind. And that's how I trade. If you're interested in that, go under the video. My free training is there. So the reason why I label this area is because beneath this area here is this. And this is where you had previous price rejection. So that's why I'm spacing my entry out, because you haven't got significant levels of entry to go off until you get lower. Okay, like the ones you can see here, and like the ones you can see here. Okay, so I would much prefer an entry, perhaps nearer 0.6. Okay, 0.58 later perhaps, but 0.6 is my next area of entry. I don't hold much weight in this current level here. Especially with the way things are shaping up. And as a risk-averse trader, that's what I'm like. I would much rather trade something else until it gets to that point. So I'm willing to wait. I'm not desperate. I'm going to take loads of trades in my trading career. Don't need to go crazy. I could lightly short any push up within that weak market, and I could go down lower for longs. Okay? So you may find that this acts somewhat as a market maker stop, a very large one. I mean, you do have a case for longs in line with this point, but if you were going to buy that before 0.60, I would make it very, very, very light, very small position, and your major or your larger size will come here. Because if you look at that point you fell to last time, the rise is significant. Okay? You go up and up and up for a significant period of time. Okay? So you've seen it happen before. Perhaps you would infer maybe, just maybe, it will happen again. Okay? So you can only go off that key price action. You can only go off simply what you can see to the left-hand side. You're always looking left. Just look left and use your higher time frame specifically. If you go on something like your 12 monthly, you can see all the rejection you want. Okay, there's rejection here. But there's rejection there and there more locally. So that last low wouldn't shock me if you beat it. I would be much more interested in longs near a 0.6. Just be careful with the news coming out today. Obviously, it's US related, so you can find that might rapidly affect the US dollar. And absolutely do not say, I know what the Fed is going to do, so I'm going to lump in long on AUD dollar because it couldn't possibly go any lower. You can see the reaction at this price action level is not doing much. You can see the historic price action lower looks a lot more valid. I would far more rather go off that lower level than the one we're at. If you want to short it, you could do it on a slight pop up. If you want to short it with a normal size, you would need to come right back to your key moving average on your monthly, your earliest one at about 0.67. So I think that calls it for AUD dollar. Don't forget to get my free training underneath. Like, share, and comment, subscribe on YouTube, TradingView.